Chime launched their entire banking platform in 90 days. Your core banking migration? Still on hold. 18 months in, no launch date. By the end of this video, you'll understand why neobanks move at startup speed, while traditional banks are locked in 2-year implementation cycles, and what you can actually do about it this week. Here's what most bank executives don't realize. The problem isn't your technology vendor. Fiserv, Jack Henry, and FIS serve over 70% of U.S. banks because their systems work. They're stable, they're secure, they're proven. But those same institutions we work with, they're discovering something uncomfortable. The core banking platforms built to protect them are now the single biggest obstacle to competing in a digital-first market. While you're negotiating change requests and waiting for vendor release cycles, neobanks are launching customer-facing features in weeks, not quarters, weeks. And here's the part that should keep you up at night. Your customers don't care about your implementation timeline. They care about instant account opening, real-time payments, mobile-first experiences that just work. When your competitor delivers that in 90 days and you're still 18 months from go live, you're not just behind on technology, you're losing the customer relationship entirely. We've seen this pattern accelerate over the past 3 years. A bank decides to modernize. They select a reputable provider. They build a project plan. They staff a team. And then the delays start. Integration challenges. Data migration issues, testing cycles that stretch from weeks to months. Suddenly, that 12-month implementation becomes 18 months, then 24. And every month you wait, neobanks are capturing market share with the speed and agility you're still building toward. The gap isn't closing, it's widening. And the cost isn't just time, it's deposits. It's lending relationships. It's the next generation of customers who will never walk into your branch because they've already chosen a digital-first provider. Let me tell you about a conversation that changed everything for one institution. Robert Hartwell sat across from Marcus Chen in a conference room. That felt too quiet for the problem they were discussing. Robert adjusted his silver-framed reading glasses and slid a project timeline across the table. 22 months into a core banking modernization, 4 missed deadlines, a vendor relationship that had become adversarial, and a board asking questions he couldn't answer. Marcus looked at the timeline, then pulled up his tablet. Real-time data from 3 neobanks that had launched in the same market over the past 18 months. Combined account growth? Over 200,000 customers. Average age? 32. Robert's institution had added 800 accounts in that same period. Average age? 57. Marcus didn't sugarcoat it. Your core migration isn't the problem. It's the strategy behind it. You're trying to replace one monolithic system with another monolithic system, and you're asking it to do everything on day one. Neobanks don't think that way. They launch with a minimum viable product, checking accounts, debit cards, mobile app. Then they iterate. Fast. You're trying to migrate every product, every integration, every legacy workflow before you flip the switch. That's why you're on month 22. Robert leaned back. So what do we do? Rip everything out and start over? Marcus shook his head. You change the approach. You identify the one customer experience that's costing you the most market share right now. Digital account opening, instant payments, whatever it is. You build that capability on modern infrastructure, and you launch it. Not in 18 months. In 90 days. You run it parallel to your core system. You prove it works. Then you migrate the next piece. Robert's response? We can't do that. Our core provider doesn't support that architecture. And that was the moment everything shifted. Because Marcus showed him something Robert hadn't considered. 3 institutions that had recently broken free from the all-or-nothing migration trap. One had implemented a modern digital banking layer on top of their existing Jack Henry core, customer-facing innovation with speed, core stability underneath. Another had launched a standalone digital account opening platform that fed into their Fiserv system. 93 days from decision to launch. 42% increase in account openings in the first quarter. The third had modernized their commercial lending workflow with Abrigo as their loan origination system, while their retail core migration continued in the background. Revenue-generating capability delivered fast, risk managed carefully. These weren't reckless banks abandoning governance. They were strategic institutions that stopped treating modernization as a single big bang event and started treating it like a series of focused, high-impact implementations. Robert left that meeting with a new question for his executive team. What's the one customer experience we could modernize in the next 90 days that would actually move the needle? Not the one that checks every box on the vendor matrix, the one that wins back customers. They chose digital account opening, the experience that Neobanks had made feel effortless. And the place where Robert's bank was losing 20 new accounts a week to competitors with faster onboarding. 96 days later, they launched a modern digital account opening platform integrated with their existing core through APIs. Customers could open an account in under 4 minutes. Fully compliant, fully digital, no branch visit required, no paper forms, no 3-day waiting period, and the results? First quarter after launch, new account growth increased 61%. Average customer age dropped from 57 to 41. And for the first time in 3 years, Robert walked into a board meeting with momentum instead of apologies. The full core migration? Still on the roadmap, still important, but no longer the bottleneck preventing them from competing. Here's what you can do this week. Identify the one customer experience where you're losing ground at digital-first competitors. Not 5 priorities. 1. Then ask your technology team this specific question. Can we build and launch this capability in 90 days using APIs and modern architecture without waiting for the full core migration? If the answer is no, ask why. If the answer is we've never approached it that way, that's your opening. Because the banks winning right now aren't waiting for permission to innovate. They're finding the path that lets them move at market speed while managing risk appropriately. That's the conversation Advanedge helps banks have every week. Not rip and replace, not abandon your core provider. Strategic modernization that delivers customer-facing value in quarters, not years. Real transformation that meets customers where they actually are. Knowing isn't enough. The next step is where most businesses fail.